Are mutual fund investments getting cheaper? Well, the short answer to this would be yes, but with a catch. This is because Sebi, the capital markets regulator, has changed the way mutual fund expenses are charged and also shown or displayed to all investors. Now, Sebi has revised the expense ratio framework. Now, you ask me, what exactly is an expense ratio? Expense ratio is the annual fee the AMCs charge to manage your money. Now, the lower the expense ratio, the higher the returns for investors, and that's how it works. So, what has truly changed and what has Sebi really changed as the mutual fund norms? Well, Sebi has introduced something called as the base expense ratio or BER. This BER will now exclude taxes and statutory charges like the GST, the stamp duty and the Sebi fees as well. The total cost will now be actually shown more clearly to you. So, the total expense will be the BER, that is the base expense ratio, the brokerage that you pay, the regulatory and the statutory charges all put together, and you will now get to know where Sebi or where the AMC is really charging you for what clearly. Now, who does this apply to? Well, a lot of your investment funds, say for instance your index funds, your Nifty index, your Nifty bank index fund, or your exchange traded funds as well, the ETFs as they are called. Remember, you can also look at the fund of funds, that's also where it will apply. Your equity mutual funds, where at least 65% plus is in stocks. Then there is also the closed-ended schemes or the non-equity schemes. There also all these newer changes will apply. Now, the key costs that have been cut that you should be now aware of. Now, there are index funds or the ETFs. Earlier, they used to charge an expense ratio of 1%. Now, it will be capped at 0.9%. For fund of funds, investing in liquid funds, also in index funds, ETFs, earlier it was 1%, but now it will be again capped at 0.9%. When we talk about fund of funds that are investing at least 65% of the AUM in equity-oriented schemes, earlier the expense ratio stood at 2.25%, but now it will come down to 2.10%. Same way, when we talk about the close-ended equity-oriented schemes, earlier they were charged at 1.25%, now they will be capped at 1%. So, these are the categories in which you will find a lower expense ratio now and therefore more savings for you. Remember, apart from this, what Sebi has also done is that for the brokerage in the cash market, that has been cut to 6 basis points from 12 basis points earlier. The brokerage in your derivatives has also been cut to 2 basis points from about 5 basis points earlier as well. Also, the extra 5 basis points exit load charge has been removed. So, Sebi has clearly said that the objective is to ensure that investors are not charged multiple times for similar kind of services, and since fund management fee already covers several operational expenses, this will cut down your own outgo when you pay or when you invest in mutual funds via AMCs. So, what does it mean for you? So, mutual funds will become slightly cheaper, not hugely cheaper, but slightly cheaper. The net returns may definitely improve for you. There is also better transparency on costs for you. There may be a net impact as per experts about a 3 to 5 basis points, but over time every bit will add up and it could actually turn out to be thousands and even lakhs of rupees when you look at the absolute long term of 20 years, 30 years odd or so. So, the bottom line is that Sebi has cleaned up the fee structure. Investing is getting more transparent in mutual funds for you. The long-term wealth creation is getting small but a meaningful boost right there. So, investors may not see a steep drop in the headline cost overnight, since the statutory levies will still be paid separately by you. However, the lower base expense ratio caps that have been put in place, the tighter brokerage limits and the removal of the extra allowance, that should prevent any kind of hidden cost for you for the mutual funds and also improve the cost discipline over time. More importantly, for you as a mutual fund investor, you will get a clearer view of where you are exactly paying, which will help you to make a better and an informed decision via your mutual fund investments.